Hello and welcome to this new edition of the Bourdieu Monday Report. The situation in the Middle East changed little last week with a military truce holding, but the Strait of Hormuz remains closed. Negotiations are ongoing, but the longer the paralysis lasts, the greater the disruption to the global economy will be. As we have already mentioned here, the impact of the conflict has already led many institutions to lower their economic growth forecasts for 2026. Nevertheless, some published statistics show a certain resilience in activity, particularly in the United States. As can be seen on the left-hand chart, GDP growth in the first quarter was 2%, close to the economy's growth potential, which is quite satisfactory. Investments, mainly those centered around artificial intelligence themes, are the main driver of this growth. More generally, it is the manufacturing cycle that is sending encouraging messages. In April, the ISM confirmed the ongoing recovery in purchasing managers' confidence in the manufacturing sector, shown here on the right-hand chart. This is also true in other economies and is not limited to the United States. Last week, we also had meetings of the major central banks. In line with expectations, they all kept their key interest rates unchanged. For now, the focus is more on inflationary risks linked to rising energy costs than on the impact on activity. Even though central bank messages were not overly restrictive, 10-year sovereign rates rose by nearly 10 basis points in the United States. The rise is less marked in euros, and in the end, bond prices fell by 0.5% in US dollars and 0.1% in euros. Equities moved in different directions. In the United States, they are up 0.9%, supported by higher than expected corporate earnings in the first quarter. In Europe, equities are almost unchanged, and they fell by 0.5% in emerging markets. Gold, down 1.8%, did not benefit from the 0.4% depreciation of the dollar index due to rising interest rates and a further 2.6% rise in oil prices. This week in the US, we will see the release of the services ISM, household confidence as measured by the University of Michigan, and above all, the April employment report. Amazon stock is back in our portfolios and on our US core holding list. The AWS division, which accounts for only 18% of revenue, actually represents nearly 60% of consolidated EBIT and is accelerating sharply by around 30%. This development is a powerful support for the expansion of the company's margins. In addition, Amazon holds a stake in Anthropic, which is currently valued low on the balance sheet. Finally, the investment cycle should peak in 2027, allowing free cash flow to rebound from there. We therefore believe that the stock's revaluation is still ahead of us. That's all for today. Thank you for your attention, and I'll see you next week.